One of the biggest misconceptions or things that are misunderstood when it comes to nursing homes and Medicaid is gifting of money or gifting of assets. Most folks know there's a rule out there somewhere that says you can give a certain amount of money away every year and Uncle Sam doesn't care. Well, the amount is currently $14,000 annually, and it can be given to as many different people as you want. However, that's an IRS rule. And who would have thought the IRS would be the good guys? But in this case, they are. Because if you give away $14,000 to your children and you apply for Medicaid, Medicaid is going to see that as a transfer for the purpose of qualifying for Medicaid. And you will be ineligible for Medicaid for a period of time based upon how many of those gifts you've made and how much money it was over the last 5 years. Currently, in 2017 Medicaid dollars, for every $9,511 that you've given away in the last 5 years, you are ineligible for Medicaid for 1 month. That means for those months, you have to pay the private pay nursing home rate, which is generally anywhere between $12,000 to $14,000 per month. So while Uncle Sam on one hand says gifting is okay, Uncle Sam on the other hand says, no, it's not. Understand the differences. Generally, we think giving your house away is a bad idea, unless you didn't really work hard to have it. Most of our clients have worked really hard through their lifetime to have their home. And what happens when you give it away is that you lose control. If you want to sell your house, it's not your decision. If you want to sell it and the kids agree to sell it, your kids are going to get hit with a tax bill. If you go into a nursing home and the house is sold, you may now be disqualified for Medicaid because you received money from the sale of the house. If you have grandchildren in college, the ownership of your home by your children can impact them negatively for financial aid purposes. If your child dies before you do, your grandchildren may now own your house, or your ex-son-in-law or daughter-in-law. Giving up control is not worth the price. Rather, we like to use trust because trusts keep you in control. It's your decision whether or not to sell the house. If you do sell the house, there's no tax implications. And the money from the trust is not going to wind up with your ex-son-in-law or daughter-in-law. It's going to go to those people that you love most.